Whenever you call in to ask about a stock that I don't know well enough to discuss on the fly, I tell you I'll do some homework and then I'll circle back. Last month, Mad Money Hall of Fame caller Dave in Illinois asked about GigaCloud Technology on April 1, and even before we could even get to it, another David, this one from Pennsylvania, asked about the stock as well on April 25th. Okay, let's go to work. This is a business-to-business e-commerce system for large parcel merchandise. Think furniture, home appliances, fitness equipment, anything that's big enough to be a pain to ship. Their e-commerce platform, GigaCloud Marketplace, connects manufacturers, primarily in Asia, with resellers in the rest of the world. Oh, it's a cool idea. They make it easier for merchants to find new goods without having to manage a global supply chain, while giving manufacturers access to more potential customers. GigaCloud has now built out a cross-border fulfillment network optimized for large parcels, with 33 large-scale warehouses and an extensive shipping network formed via partnerships with various freight services. GigaCloud also takes some products as its own inventory. They call these first-party products, which are then sold through both its own online marketplace and through third-party e-commerce platforms like Rakuten in Japan, or OTTO in Germany, and, of course, Amazon, Walmart, Home Depot, Overstock, and Wayfair here in the U.S. Those first-party sales actually accounted for 72% of their revenue at this point. Now, this one's interesting because GigaCloud initially came public via a tiny IPO in August of 2022. That was one of the very few deals at that time. It was also a Chinese company at the time, although it changed its domicile to the United States last year. Early on, GigaCloud became a meme stock, jumping from $12.25, where it came public, to $62, thanks to those clever gremlin memesters, before, of course, collapsing to the mid-single digits by late 2022, as meme stocks tend to do. At that point, it was way too small for me to mention on air. But as the company re-domiciled to the U.S., this has become a much better story, and the stock's caught fire over the past 8 months. Some of that's because GigaCloud put up a series of excellent numbers. Their active third-party sellers have grown from 382 in 2021 to 815 last year. Active buyers went from 3,556 to 5,010 over the same period. Gross merchandise volume, GMV, people care about that more than anything else, risen at a nearly 36% compound annual growth rate. And their net income's more than tripled. Oh, yeah, this one's been profitable since it came public. Of course, at this time last year, GigaCloud was still in the mid-single digits. Since then, the stock shot up nearly 600% to $35 and change. It was actually at $45 in mid-March before it got dragged down by the sell-off in all things growth. While that's a stunning move, I think GigaCloud probably earned it. They reported a great quarter last May. The analysts started raising their earnings estimates dramatically. The company moved its headquarters to America. Then last fall, a short seller that I'm not really particularly familiar with, an outfit called Culper, C-U-L-P-E-R Research, published a report calling many aspects of GigaCloud's business into question, from management's experience to how the heck they can run so many warehouses with so few employees. Culper also found that some of the company's marketing materials and social media posts had used stock images, say of a forklift driving an anonymous warehouse, which is not great. They claim they sent an investigator to some of the company's U.S. warehouses where not a lot of activity was observed. How about that? GigaCloud responded to the short seller report, giving explanation for some of the allegations, though not all of them. For example, management said they have so few employees because they use third-party contractors. They have such a small truck fleet because they use third-party delivery drivers, and their board of directors commissioned an independent review to look into Culper's claims. However, we never really got a response to the most damning part of the report, the stock images and the lack of activity at the company's warehouses. But in any case, the short report hasn't had much of an impact on the stock, just something to keep in mind at this point. At the end of November, GigaCloud reported a great quarter, and the stock simply took off after that, climbing higher and higher, interestingly on much higher volume than before throughout December, January, February, and March. There was a strange day in mid-February where the stock suddenly plunged 25% on a very high volume, but without any news that we could find. Then it just bounced back over the next couple of days, so everyone moved on. I thought that was very strange, though. There was also a ton of volatility following GigaCloud's fourth quarter earnings that were in mid-March. The stock was already volatile beforehand. Then on the day of the report, March 15th, it soared 23%, and that's when the stock put in its 52-week high of $45 and change. But over the course of the next week and a half, GigaCloud shares plunged more than 40% from their highs before stabilizing and beginning to recover. And that's when we started getting the calls about this one. Most recently, GigaCloud reported last week. And listen, the numbers were once again great. Revenue up 96.5%, earnings per share up 71.4%. Every major line item better than expected, although the magnitude of their beats keeps shrinking. Now, some of that's the law of large numbers, right? Some of it's because the analysts have adjusted their expectations higher. This time, even though the results were excellent, the stock did not get much of a boost, rallying just 1.5% in response. Since then, it's pulled back. Now it's down almost 9% since the quarter. Now, here's the tricky part. I'd love to be able to say that after its huge run from $5 to $35 and change over the past year, GigaCloud's simply gotten too expensive now. But I really can't if you believe the analyst estimates, and honestly, I'm not sure how much you can, given that only 2 analysts cover this one. But if they're even close to being right, then GigaCloud is ridiculously cheap. It sells for less than 12 times this year's earnings estimates, just over 9 times next year's estimates. This thing was just ultra cheap before presumably becoming, because of these so many issues with the story, and now it's just regular cheap. Again, assuming you believe the estimates. So what are we going to do with this thing? I mean, frankly, this is one of the tougher homework assignments I've gotten in recent memory. But I can't say that the dog ate my homework, because while Wolfie, while really stupid, isn't that stupid. If you take everything about the story at face value, then buying GigaCloud would be a no-brainer. But after taking a thorough look, I worry there's got something off about the story. I can't pin it down. I don't love the fact that it was a Chinese company going into last year. I don't love that it was a meme stock immediately after coming public. I don't think that the worst allegations from the short report last fall were ever properly addressed. I don't like the way the stock just plunged one day on no news in February and then came right back. I don't like the erratic trading in March. Sure, it's a small cap stock, but this kind of action gives me the impression that somebody out there knows something that I and we don't. Bottom line, GigaCloud's whole story feels unnecessarily fraught. And with so many good e-commerce and logistics stocks out there, hey, Amazon, I don't think it makes sense to chase this one after a massive run. It just feels like an unnecessary risk. Remember, in this business, you don't need to swing at every pitch. This one feels too tricky. The stock bat, it stays on my shoulder. Mad Money is back after the break.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.